Warren Buffett, the renowned investor and CEO of Berkshire Hathaway, has recently signaled caution regarding the stock market's current state. As of the third quarter of 2024, Berkshire Hathaway's cash reserves have grown to approximately $325.2 billion, up from $276.9 billion in the second quarter. MarketWatch: This accumulation of cash suggests that Buffett perceives limited attractive investment opportunities at present valuations, indicating a potentially overvalued market. Historically, Buffett has advised investors to be fearful when others are greedy, implying that the current market exuberance may warrant caution. Nasdaq: In light of these signals, investors might consider the following strategies. 1. Maintain liquidity. Keeping cash readily available can provide flexibility to capitalize on future investment opportunities that may arise from market corrections. The Motley Fool. 1. Diversify investments. Diversifying across various asset classes and sectors can help mitigate risks associated with potential market downturns. 2. Exercise prudence. Approach new investments with caution, conducting thorough research and considering long-term value over short-term gains. It's important to note that while Buffett's actions and insights are influential, individual investment decisions should be based on personal financial goals, risk tolerance, and time horizons. Consulting with a financial advisor can provide personalized guidance tailored to your specific circumstances. For a more in-depth analysis of Warren Buffett's recent market perspectives, you might find the following video informative: Warren Buffett in 2025. 1. Brief overview of Warren Buffett's legacy. CEO of Berkshire Hathaway, one of the greatest investors of all time. 2. Mention his investment philosophy of value investing, patience, and long-term focus. 3. Set the context. Buffett's actions in 2025 amid market uncertainties. Current market conditions. 1. Discuss global economic factors in 2025, inflation, interest rates, and market volatility. 2. Highlight any major market events or trends, e.g., AI boom, green energy, geopolitical shifts. 3. Relate how Buffett's cautious approach reflects concerns about overvaluation in certain sectors. Berkshire Hathaway's cash reserves. 1. Highlight the record cash reserves at Berkshire Hathaway, exceeding $325 billion. 2. Discuss what this signals. Buffett possibly waiting for better opportunities or a potential market correction. 3. Reference his famous quote, "Be fearful when others are greedy, and greedy when others are fearful." Buffett's investment moves. 1. Discuss any major acquisitions or divestments by Berkshire Hathaway in 2025. 2. Example sectors of interest: traditional energy, insurance, consumer goods, or tech. 3. Analyze Buffett's strategy of sticking to industries he understands deeply. 4. Contrast his approach with trends like cryptocurrencies or speculative tech investments. Key lessons from Buffett's actions. 1. Patience pays. Emphasize his ability to wait for the right opportunities, even if it means holding cash. 2. Focus on value. Highlight his preference for undervalued, fundamentally strong companies. 3. Avoiding hype. Discuss how Buffett avoids speculative bubbles. 4. Long-term perspective. Stress how he remains focused on enduring value, ignoring short-term noise. Buffett's advice for investors in 2025. 1. Share timeless principles. Invest in what you understand. Diversify your portfolio but don't over-diversify. Stay disciplined and ignore market hysteria. 2. Talk about the relevance of these principles today, especially in a volatile and tech-driven market. Conclusion. 1. Reflect on Buffett's enduring influence in the financial world. 2. Mention his legacy as an investor who built wealth through discipline, knowledge, and integrity. 3. Close with a key takeaway. Buffett's success is rooted in simplicity, consistency, and an unwavering belief in long-term value.